All right, in this video, I'm going to teach you how automobile insurance works. Now, automobile insurance is something that is required in a lot of areas, at least it here is in the States for sure. And while you might carry automobile insurance, you might be a little confused as to what you're actually paying for and how your coverages work. And so we're going to talk a little about the purpose of this kind of insurance, generally speaking, and then we'll dive into a little bit about some of the different coverages just so you kind of know what it is that you're actually getting and what value you're receiving. Now, for starters, automobile insurance is a form of risk transferring, or sometimes referred to as risk shifting. And the idea behind here is that we incur some type of risk or have the potential to incur some type of risk engaging in an activity, and we can't avoid it, we can't eliminate it entirely. And so instead of incurring the risk on ourselves, we're going to shift or transfer that risk to another party, which is generally going to be, in this case, the insurance company. So the insurance company is going to bear the weight of that risk. We're going to shift it over to them. And then in return, we're going to pay them a monthly premium, right? And that's what comes out of your bank account every single month. That's the premium. In return, the insurance company will step in and will cover you if you have what we call a covered loss. So a loss that falls under the kind of guidelines of your policy. So automobile insurance falls under this dynamic, but more specifically, how it works is there are, generally speaking, two types of coverages that you pay for when you get an automobile insurance policy. So the first type of coverage is what we call bodily injury coverage. And bodily injury coverage is kind of just like it sounds. It's meant to cover people in the event that they are in some way hurt in this case, an auto accident, although there's specific types of coverages that we'll get into that fall under bodily injury coverage. The second type of coverage, and these are again kind of the broader categories of coverages that you'll see, is what we call property damage coverage. And property damage coverage is coverage that goes towards a property. So when we think about property in terms of a potential auto accident, obviously your vehicle and any others that are involved in an accident fall under property damage coverage. So kind of dissecting these in a little bit more detail, we're going to first look at bodily injury coverage. So the first coverage that falls under this broad category is what we call bodily injury liability. Now, bodily injury liability is a third-party coverage, and what this means is it doesn't cover you if you're involved in an accident. It covers other people if you are at fault. So typically, bodily injury coverage has some sort of limit. You might see, as an example, your policy might say 100,000 / 300,000. So what this means is that if you are in an accident and if you are at fault for said accident and parties involved, whether it's a passenger in your vehicle or a passenger or occupant in another vehicle, then your coverage will allow you to pay for up to $100,000, which is this figure here, towards any individual claim. Now this covers medical expenses, kind of pain and suffering, which is often called general damages and those types of things for being in the accident and obviously being hurt. And up to $300,000 per accident. So if you're in an accident and there's 5 people, well, yeah, each person qualifies for $100,000, but the cap on the policy is $300,000. So there could be a limits issue, what we call, where the exposure exceeds what your bodily injury limits are, although that's a pretty significant accident, and generally speaking, a lot of accidents that we see generally fall under this limit, while there are obviously exceptions to this. But this is kind of how this works here. So if you're in an accident and you're declared to be at fault, if anybody is hurt, then you'll use this coverage as a way to transfer that risk to the insurance company, and then they'll of course step in and kind of assess the extent of said injuries and medical expenses and try to kind of close that particular claim for you, meaning they'll make an offer and try to pay within your policy limits. So that's bodily injury coverage. Again, really important. In the state of California, which is where I am, you're required to carry bodily injury coverage It's a pretty low limit though. I think it's $15,000 per person and $30,000 per accident, which sounds like a lot, but obviously with the way that medical expenses work and the way that the medical industry is in general and how much things cost really doesn't go all that far, truthfully. The next coverage that follows under bodily injury coverage is what we call medical payments. Some coverages might refer to this as what's called MedPay, which is simply just kind of a hybrid of the two, but might be medical payments. Now, this is a limit. So you might see that you've got, let's say, a $5,000 limit on this. And what this is designed, this is a first party coverage. So this is for you and anyone in your household if you're in an accident. And this covers medical expenses. So it doesn't cover any sort of what we call pain and suffering and that sort of thing. But if you're in an accident and you're hurt, and you go to the doctor and you pay for a copay, or you get an insurance bill from going to the hospital or the ambulance, you can use this coverage to actually kind of recoup some of the costs associated with that. So very, very helpful. Again, first party coverage designed for you and anybody in the vehicle that's part of your household. The next coverage, which is a pretty important one, is what's called Uninsured Motorist. And again, this is a bodily injury coverage. So we're talking about, again, coverage for people that are in your vehicle. And this is something that actually is useful in the event that you're in an accident and somebody is not carrying insurance. And so this can be a coverage to help with that. Obviously, in many states, carrying third-party liability coverages is a requirement, but that doesn't necessarily mean that people do. Sometimes policies lapse, people don't pay for their premiums, and then, obviously are still driving around and that sort of thing. So this really is kind of a protection against you in the event that you're in an accident with someone who is in fact uninsured. So that's the bodily injury coverages. So not too complicated. Again, on your policy, you'll see limits and different numbers, and so that represents how much coverage you have. So it's always really important to understand your coverages. It's never a great idea to shop insurance just on the cost of it, because you might not be getting much for that coverage, and so it might be relatively inexpensive, but you might be getting very low limits, which obviously you have a lot of exposure potentially, or the potential that the loss could exceed what your limits are. Now, the next one we're going to cover is going to be this property damage coverage. And so property damage is where we talk about the physical property that's involved in the accident. So for starters, the first coverage we're going to talk about is what we call property damage, which I'm going to abbreviate as PD liability. Now, property damage liability works very similar to bodily injury liability. This is coverage that is designed to address a damage to other vehicles that are involved in an accident. So similar situation, if you're involved in an accident, you are declared to be at fault to some degree. It doesn't have to be 100%, but this coverage would help cover damages to other pieces of property, which includes vehicles, includes fixed objects like guardrails, fences, anything else that obviously people tend to damage when they're driving around. And very similar to bodily injury, this also has a limit. And so an example would be $100,000 could be a limit. The minimum, at least in California, is $5,000, which doesn't cover anything really, with the exception of more minor accidents. So it's not a lot of coverage. And they go up from there. I think the next step might be 15 and then 25 and 50 and 100 and then 250, 500, so on and so forth. So this is a total limit. So regardless of how many vehicles you are responsible for, this is the amount that is going to be paid and distributed between them. Obviously up to that amount. If it's lower exposure, then you'll only pay for what you are owed, or your insurance company rather will only pay for what you owe. So again, very similar. You can determine what kind of coverages you get, and your insurance premium is going to be dictated on a lot of different factors, but one of those factors is how much coverage that you choose to carry. So if you carry more coverage, you'll pay more of a premium, and so you kind of have to assess, well, what's the risk, the potential, and then obviously, what am I paying on a monthly basis? The next coverage within property damage is what we call collision coverage. Now, collision coverage is a first-party coverage. And so that means it covers your vehicle. So typically, when you contact an auto insurance company, you are actually going to list the vehicle on your policy. So you'll give them what's called the VIN, which is your vehicle identification number. It's a long character, I think it's 17 digits, that is unique to your vehicle. Based upon that, the insurance company is going to rate you, based upon what kind of vehicle you're driving, your driving history, a lot of different factors, and then we'll assess you a premium, also dependent upon what kind of coverages that you want. Your collision coverage is going to protect your vehicle if you're involved in an accident. So in terms of the dynamics of collision coverage, usually you have a deductible. And so your deductible works a lot like if you go to the doctor, right? It's like your copay. So a common deductible is $500. This is kind of the most common one. You can get lower, you can obviously get higher. Highest I've seen is a $2,500 deductible. Lowest I've seen is a $100 deductible. They're probably maybe higher or lower, but that's the lowest and highest that I've seen. Obviously, if you're getting a higher deductible, you're kind of betting on the odds that you're not going to get in an accident and you're never going to need it, or you've got a lot of money saved up so you can pay that if you absolutely need to. If you're getting a lower deductible, you're kind of betting on, hey, I'm going to probably hit something and I'm going to use this. And so when I do, I don't want to pay that much out of pocket for it. But your premium is going to be considerably higher because of that. So with the deductible, you always pay this amount. If your damage is less than $500, then that's your responsibility. The insurance company doesn't pay anything. But if the damage exceeds this $500, then the insurance company is going to pay up to the damages, or the what we call ACV, the actual cash value of your car. So there's a terminology or a term you're probably familiar with, which is called a total or a total loss. If your vehicle is damaged to the extent that the damages exceed the value, then the insurance company will pay this figure, your actual cash value. So they'll assess a value for the car, which is based upon comps, kind of like what we do with houses. And then they'll make you an offer and say, hey, we think your car is worth this, so this is how much we'll pay you for it. We won't pay you for the damages because it goes over what the car is actually worth. Now, the next coverage outside of collision is what we call comprehensive coverage. And comprehensive coverage works the exact same way as collision, but in order to qualify, it's a different event. So collision is where you are come into physical contact with another object, right? It doesn't have to be a car, it could be anything. Comprehensive coverage is meant to cover your vehicle under non-collision accidents, or non-collision events, rather. So most common events include things like theft, things like fire, water damage. Those are probably the most common. There are others, vandalisms, right? Same sort of thing, falls under comprehensive coverage. So typically with these types of coverage, the vehicle is not being moved and it's not being occupied. That's a general commonality, although not always. And very similar to collision, you've got a deductible of some kind. So let's say it's $500. And if the collision damage exceeds that amount, or the comprehensive damage rather, exceeds that amount, then your insurance company will take care of it up to the damages not to exceed the actual cash value. Okay, so comprehensive coverage, again, pretty common on many insurance policies, but you might have a policy that's what we call liability only. And so that generally means that you're only going to cover probably, let me switch here. You might carry your bodily injury coverage, and you might carry property damage. That's generally what we call a liability only policy. Okay, so you're carrying just what you have to carry. And this sometimes makes sense, like when you've got a really old vehicle where the value of it isn't very significant, and so you don't really want to pay for coverages that if the car is totaled, it's not that big of a deal for you. So once vehicles get older, some people choose to drop coverages. Certainly not a requirement, though. You can carry the coverage for as long as you want, and technically it becomes less expensive as the vehicle diminishes in value because the insurance company knows that they're not going to be paying out as much because the vehicle is worth less. But that's a little about how insurance coverages work. So when you're thinking about your automobile insurance, right? Think about those things. Obviously, you've got requirements that you have to carry, but it's really important that you not just select based upon the price, but you select based upon what you are getting and what kind of coverage you need to be able to cover any kind of risk you're going to incur. One thing I recommend too is if you're ever in the process of purchasing a vehicle, get the VIN for the vehicle and have your insurance company find out how much the cost is to insure that car. All cars are different. So you want to make sure that you can not only afford the initial and the monthly payment if you're going to get some kind of loan, but your insurance coverage isn't going to go up significantly, and then you could be put in a position to where you have to get less coverage than you need, which only opens up the door for more liability later on. So hopefully that discussion was a little helpful, probably more information than you really wanted to know about insurance coverages, but I'll let you decide. Thanks for watching.